Should you use a current S-Corp for a new business like real estate investing? I believe that that would be an accurate summary of this. In this scenario, there is a business owner running an S corporation and has been running that business for 18 years. The business owner is thinking about getting into real estate investing, and so he says, should I just set up a DBA for right now and then start using that same company for real estate investing under the DBA? A DBA is just a nickname. It's not a new company. It's not a new entity. A DBA is just an alternative name for the existing entity. I don't recommend using a current company for buying large assets like real estate, because if there's any problem that comes back on that company later, all of the real estate assets are at risk because they're in the company. A better approach is to start a separate LLC for your real estate investing or buying other large assets. So if some problem like a lawsuit related to the old business is brought, that business's assets may be at risk, but the new LLC's assets, like the real estate, are not at risk in that lawsuit. So as a general rule, you want to have assets that are expensive held in an LLC that does not have operations that could result in lawsuits or tax consequences. You might say, well, what kind of risks could a business owner or a business face after 18 years in business? Well, let's say, for example, 3 years earlier, an employee was let go, and that employee was having a bad attitude, and the business owner said, I need to let you go. Let's say that that employee later sued for discrimination, wrongful termination, or improper payment of wages. I'm assuming that there's no statute of limitations that would prevent that, but that's a scenario where now you have a former employee, a disgruntled employee, suing the company. You don't want to have your real estate assets at risk to that lawsuit. Another example would be, let's say, for whatever reason, the company didn't report its taxes properly or didn't pay its taxes properly. That's another great example of where the company would have liability, but if you have your real estate assets in a separate LLC, you would not have liability there. So as a general rule, if you have a business that has potential liabilities, so that's contracts, operations, employees, that should be separated from a separate entity where you have real estate investments or other significant assets. We call that a holding company. We call the ongoing business that is employees and contracts and operations an operating company. If you have other questions about things we've discussed or other legal topics or business topics, topics of importance to entrepreneurs, CEOs, and leaders running companies, please feel free to add them into the comments section below. I will use those questions to generate ideas and topics for future live Q&A sessions that you can watch right here. If you want to be alerted to the next live Q&A, you can subscribe on the YouTube channel and click notifications. You can subscribe to our newsletter to get an email update at aaronhall.com/free. Or if you follow us on one of the other social media platforms, you may, if the platform allows it, get some sort of update regarding our next live Q&A. I'm Aaron Hall, an attorney for business owners and entrepreneurs. This is an educational program so that you can spot issues to discuss with your attorney, avoid common problems in companies, and hopefully enjoy the rewards of a more successful company and life. Thanks for joining today.